Hello dear traders, petar.jacimovic here from vicanalysis.com. I have an interesting setup on the GBP USD. This is a 30-minute time frame, but I will explain you why I'm expecting the upward price, and I'm expecting at least 200 pips upward, and even a larger upward movement, maybe even to 400 pips or 500 pips. Now let's see what's going on here and what we got here according to the Wyckoff analysis. So basically what we got here is we started the trading range here. Market went downward this stage here, and the price made a low 1.4383. After that, price went to some sideways. Price retested that area, and then we saw a massive demand and increasing in volume spike. It was a volume spike also on the futures market. It was a volume spike on the some largest brokerage houses positions. So this is a absolutely sign of strength. This bar here, this bar is clear sign of strength. And price went out of the trading range, so we can say like this is we can label this with this this is a secondary test. This is a first sign of strength, and then this is what Wyckoff called the spring or terminal shakeout. It happened here on the bottom, and then we have another sign of strength, and then we got testing, and this is also testing. So this we call the ice as well. Pardon, ice is a support. Put this here, and here we got some selling climatic actions in the background and so on. This is in the background, so we have preliminary support and so on. So we're just labeling the according to the Wyckoff analysis. Okay, so here again, this is a trading range of like a 5 days trading range, and this first SOS happened very fast. It was extremely strong demand, but of course the smart money and the market makers will mimic this upward moment, and they will postpone the real strength. So what happened is there is a massive demand came in and so on, and price broke also the swing highs from this stage here. For example, this swing high, which was active at this stage, and this swing high, and pretty much most of the traders, they tried to buy here on the retest and so on. They saw the breakout and everything, but what happened is that market makers did their job and they gapped lower. And not just that, because after the gap, price went lower 130 pips. Now you wonder what happened. Basically, they want to close massive buyers from this stage here, and also mimic the breakout of the support or the ice, and on that way, with this price broke clearly this support, and everyone at this stage, there is a lot of selling pending orders. If you watched my webinar about market manipulation and how they're doing, this is exactly how they're doing. So first of all, they mimic the massive upward movement. We have the massive volume there, massive volume there, a lot of buying positions there, but the price it was about just 2 days in the trading range, and it's actually too early for real professional traders in the smart money to do to think that this is a final accumulation. So what we're doing is we're pretty much waiting to see what will happen. And as you see, this Springer or terminal shakeout happened, and after the price gap down, the price went all the way to 1.4350, and there we got triggered a lot of sell orders, you know, the breakouts and so on. Also, this movement closed the buying orders from this stage here. Okay, when they washed out everyone, buyers from the upward side with stop loss here, and sellers from this stage here with a stop loss around this stage or even at this stage, they wash out totally this area, and price went higher later on. We did a spring, which is about the Vic of the final, you know, the final clue of this is accumulation. This is about 5 days trading range. Price is chopping around this stage here, and we also got some strong demand at this stage here. Price went to test this and test this, but as you see, we stabilized the higher swing lows at this stage here, and also the 50 Fibonacci retracement from this swing low to this swing high held successfully today. So that's the reason why I established buying positions, and with stop loss about 50 pips. I'm aiming for at least 150 to 200 pips, but maybe I will depend on the price action. Maybe I decide to hold even for a 300-400 pips. So according to Wyckoff analysis, to Richard Wyckoff, he was a specialist about the trading ranges. I'm also focusing a lot of my trading to identify them and identify accumulation and distribution, or reaccumulation and redistributions, and to find a very solid, we call also this equilibrium, where the price find a fair trading range and trade between that trading range with the spikes, of course, this, but with the knowledge of the Wyckoff analysis, we recognize what's going on the market, and we can establish some very good positions. What's the important part here is that Wyckoff analysis can bring you the very massive risk-reward ratio, which is the key part here. In the Wyckoffians, we don't go for anything lower than 1 to 3 risk-reward ratio. That's a very minimum. So if I risk here 50 pips, I'm going for at least 150 pips, and of course, if I see the opportunity to take more, I will go for more. So that's pretty much that. So again, the market makers will do everything to mimic the breakouts, to do the fake breakouts. You know, the accumulation phase, which is the starting of some demand or the higher prices, is actually created, you know, by them, but because the market makers and smart money, they define the trading range, and then they hold that trading range for a days. It can be anything from you know, 5, 10, 15, 20 days they can hold in the one trading range, and on that way they just wait the right moment to pretty much fake the crowd or fake the retails, and later on to establish some very big positions. Pretty much everyone thought that if we got this massive demand here, it must be that buyers finally start to, you know, to push this higher. But again, the market makers mimic this buying. There is a lot of buying order, that's for sure, but they also sold into this buying to close all the retails, you know, and mimic the breakout traders to sell here, and later on they again established buying positions. So this is how they doing, you know, they mimic this accumulation. Even the people who know something about this, it will be very hard for them to read. So you must be very careful with defining the accumulation distribution. So once we got the final spring here, and successful and the higher swing lows established here, we know that this is a there is a big strength on the market, and there is we're out of the trading range, the original trading range here. So I'm expecting much higher price on the GBPUSD in the next period. Also the RSI 12 period, it's going very well from 30 to 30 level to higher, confirming this is end of the correction near this 50% retracement, end of this bearish correction. The targets, so we can speak about the targets, but there is a swing high here, and I'm expecting to break out of that swing high in the next period. But for that area I have about 200 pips, which is the 1:4 risk reward ratio. So at least I will go to take profits there, but maybe I decide to scale out some scale out half position and let the second half to ride. Okay, if you like my analysis and if you want to learn my method, I basically I'm using the Wyckoff analysis, and I like to define the trading ranges and trade around that to establish the very high risk reward ratios. So if you want to learn how I use the Wyckoff analysis and how we spot opportunities in the market, how we look the intermarket coloration, and then you can add me on the Skype. petar.jacimovic is my user name. I will write in the link description of the video, and you can add me and start my mentorship program, which is a 7-day course, which where I will teach you absolutely everything in my daily routine, what I'm doing, how I establish positions. So we will go through to the supply demand zones, the multi-Fibonacci zones, also the advanced volume analysis, the volume spread analysis, but the key factor is the Wyckoff analysis and how we define accumulation phases, reaccumulation, distribution, and redistribution phases. That's it for this video. I hope you liked. If you like my video, feel free to subscribe on my YouTube channel. Also feel free to leave some comment. For now, I wish you good trading and hope this setup will work good. Bye.